Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. We are on the 17th. What am I? Oh, that doesn't sound quite right to me. Sorry. Today is the 17th. The news squawk is talking in my ear and I cannot focus. Quiet. Okay, that's a little better. Yeah, it doesn't sound... That's maybe a little better. I don't know, something I can hear the echo in the room a little bit more. It doesn't sound right to me. All right, I got the robot started here. Let's just turn that. All right. Anybody who's watching this on replay is like, what the fuck is wrong with this guy? Okay. Gold, we'll get to that in a second. S&P 500, looking like it's doing, NASDAQ is kind of recovering a little bit. Yesterday was really difficult action. The equity indexes kind of struggled, and it appears that the primary driver for this was the Treasury just absolutely getting destroyed. When you come out and you look at this on a daily chart, that is like a very concerning candle. In that this suggests to me that we're at the start of a really strong trend about to come through. Now you are seeing it pull back a little bit, but on a day like this, usually there's a propensity for it to continue through a little bit, right? So, in response, well, first of all, oil doing pretty well still. Fundamentals over there supportive. Gold, though, not doing so well with the drop in yields. So, generally speaking, yields higher means less demand for gold, right? Even though, like, yields are increasing because they want inflation, and people were buying gold because they're concerned about inflation. Well, gold's not reflecting that, at least. Silver is still doing okay. And, silver's still kind of skidding along the side there. Copper just kind of going sideways. So we get this news here in about 2 minutes, the PPI. So here again, people are really watching this inflation data carefully. And if the PPI month over month, we're looking for a spot 4 estimate, and if it ends up being higher than that, or core PPI being a spot 2, then we could have some crazy movement. So let's pull that up. Let's do this. So I see when you posted this this study where we have to go and look at it. Research those ways to forecast a bubble that was about to burst. Would be interesting. What was it called? Bubbles for Fama? I'm gonna have to read it and come back another day. Harvard University. We evaluate Eugene Fama's claim that stock prices do not exhibit price bubbles. Okay. Based on U.S. industry returns 1926 to 2014 and international sector returns 1985 to 2014, we present 4 findings. Farmer is correct in that sharp price increase of an industry portfolio does not, on average, predict unusually low returns going forward. Such sharp price increases predict a substantially heightened probability of a crash. attributes of the price run up, including volatility, turnover, issuance, and the price path of the run up, can all help forecast an eventual crash and future returns. Some of these characteristics can help investors earn superior returns by timing the bubble. Results hold similarly for U.S. and international samples. Okay, that's interesting. That's not quite what I don't know. That first sentence seems to contradict what the rest of what they said there. Okay, let's focus. We get this number coming. Okay, so there's an immediate reaction. It is higher than expected. Okay. So there is some absorption. On both sides here. The 10-year is very active. It's like old times. Oh, my old friend is back. Oh, I'm not even showing the main screen here. Gosh, I'm excited. Like, I'm really excited. Dollars rising off of that news. So there's pretty heavy absorption on the bid side, but they just keep pushing through it. Well, 10K is a lot, so let's take one contract off. This is a real flow, man. This is a real flow coming in the treasuries. This is just like an absolute delight. And we're trading almost 10K contracts at every step. Every step down. Oops. Misclick there. It turned out okay. Okay, we're good. I'm gonna go check on something. I'll be right back. All right. Well, look at that. Right back up. Man, I caught that really well too. That was a really well executed trade. Online trading platform will let traders bet on yes or nope. Don't do it. Don't do it. Where are you reading that from? On questions about future events ranging from economics to the weather has raised funds from prominent investors. Oh, so is it going to be like a predict it, but like a serious exchange? Because there's some shady things about predict it. Oh my gosh, it comes all the way back. It comes all the way back. Hmm. Hmm. Is there something in there? Let's see here. There's got to be something more to that. Producer price index for final demand increased 1.3% in January. Seasonally adjusted U.S. Bureau of Labor Statistics reported today this advance is the largest since the index began in December of 2009. Final demand prices rose spot 3% in December and spot 1% in November. On an adjusted basis, the index for the final demand moved up 1.7% for the 12 months ending January 2021, the largest increase since climbing 2% for the 12 months ending January. Prices for final demand, less foods, energy, and trade services moved up 1.2% in January, the largest advance since the index began in September 2013 for the 12 months ending in January. Prices for final demand, less foods, energy, and the trade services rose 2%, the largest increase since a 2.1% advance for the 12 months ended June 2019. Then when we come in and we look for things, January. Yep, let's see here. Total food spot 2. So food's still not increasing too much. Energy, though, very much so. Trade, transportation, and warehousing, other. Demand from 12 months ago. Okay. And then when you come in on a monthly adjusted basis, it's worse, yeah. Oh, that was seasonally adjusted too. Oh, this is by commodity type. Well, now it's really interesting to me as well, the way that moved. Market makers did not pull out of the way; they absorbed all of it. Almost 10K contracts at every level. We are now higher. Well, we're back to the open at least. So I made a good trade there, but I got super lucky, I guess you could say. Well, I shouldn't say I got super lucky because I did execute on it really, really well. Let's see here. And Jay caught some good trades off of that too. The other one, Indies, is in a long, but it's not. Wouldn't he wasn't before the trading session started, so it's not actually in it. Sequoia, Chuck Schwab, are those backing Kalshi, which plans to launch in March? So when we first started saying that, I was like, that sounds like a binary options exchange, and you should stay away from those. But if it's a prediction market is what it sounds like, then having a more serious prediction exchange than Predicted, which frankly is not very... It's very basic. Let's just say there's problems with it. There's been a couple of times where what they say it should do was a little questionable, let's say. Okay, so I got that, but now Jade is taking a short. So that's the one where it's like, the long is correct, but yeah, I don't know. That's interesting. So they moved down off of that, and we've been buying it. These were also, well, that one was okay. But this one was actually very much against the level 2. So this one right here, I think he kind of got lucky. This bet on the yes or no sounds like a good idea. Well, it's a prediction market. I don't know if I don't know how much I want to be involved in that. The issue is that on a lot of those questions, it's very rare where I see a situation where that market is really off kilter, you know? Are you trading today? Yes. I already took a trade. Actually, that trade that I took in the treasury could be all I need. Could be all I need. It's still moving, so let's let it go. Are they gonna break the 21? So I'm wondering now, after all of that happening, and the way that it absorbed at the bottom, is it the case that yesterday's move down was somebody going short because they had done the analysis and knew that the PPI numbers were going to be bad and show higher inflation, and now that the news is out and they got their move, that was them exiting their position as everybody puked into it? Because that was a really quite a fast and surprising move back up. It could also, though, be just that all of the news traders that took it and got out, and now the market maker is just rebalancing his books. But when it starts doing that, this is when I start to like make the mistakes. This is when I'll take another one. I'll be like, no, it's a short again. I'll try shorting 20, and they'll stop me out. And probably on the treasury, I want to just kind of let them balance it back out. And we'll say we should wait at least 20 minutes. So we give it another 10 minutes to see what it does. Now, meanwhile, over in the S&Ps, the SPOOs, they had a pretty good move down and recovery, and now it's getting quiet again. I'm also wondering, so if I come back over here into Twitter, I don't, there might be something more to the report that I'm not seeing. A more nuanced analysis than my own reading of just the straight number that, caused the move back up. Because it's interesting to me that not only did the treasuries retrace on that, but the equities retrace that. This retail sales number was a big print. It didn't just beat the expectation, it demolished it. Also breaks a streak of disappointment in that data point. There's a lot of people tweeting about it. Pay attention to the MOVE index. The index is reflecting bond market volatility as per chart. The bonds get volatile. They make the equities move in the downward direction. Correction pending, ... Brannigan thinks that the equities are going to go down on this, huh? PPI core year over year came in at 2.0%, double the consensus. These numbers are screaming stagflation. Yes, it is. It actually, though, man, because when you think about it, the CPI numbers that we saw last week were basically in line. So we're getting this, and I have seen this before. We have seen this pre-pandemic where inflation was increasing, but it wasn't being passed on to the consumers because the consumers weren't doing so well. And that is stagflation. It's like there's inflation, but it doesn't mean that consumers can buy things. And so you get this situation where you have to increase rates, but then the economic activity isn't good. So that is a little concerning. What is Pivot saying here? This is what happens when you stuff everyone's pockets. Jay got the win again. Wow. No, wait, that was Jay. Oh, man. Oh, did Brandon take it long? Where did Brandon take it? Oh, yeah, he takes it on this one. Where did Brandon take it long at? Or did he already? He just stopped out. Oh, Brandon. Oh, Brandon. That's unfortunate. You know what? Oh, he was doing the right thing. I mean, he was doing what the trade is supposed to do. So, and we just... Okay. Man, Jay is just... I can't believe it. That one was lucky. That one was good. That one was good too, even though I was kind of like, I don't know about it. Now, this one right here, I'm even going to say was good. When I'm looking at it, I think that what I can do for Jay is set his directional bias based off of what I'm seeing here in the level 2. So I think that will be good enough. What I really need to see is I need to see Jay take a long when the trend and everything else is really, really against him. I mean, it's kind of a counter trend trade, but he's kind of catching overextension. So, okay, so I guess the 20 would have been good short. Want to watch here though, like on that uptick, for instance, they stacked a lot there, which is a little weird, don't you think? 2,000 to buy it, and then they stacked almost 5,000 on it, and then they tick up again 19. Stack 3,000. Yeah, when I'm looking at this, so the offer side isn't. I wouldn't necessarily say that they're pulling, because they are trading 1 to 2,000 contracts per move, and that's about average these days. But then you're getting a lot of bidding on it. That looks to me like some so there's going to be a bunch of people that were short from yesterday. You're going to be taking profits, right? So I think that that's why we saw so much absorption against that move, right? Now that we're coming back up, you still see that absorption. So there's probably some people taking profits. And I would also assume that those people taking profits, they're going to want to, it makes sense to me that they're going to be doing it with limit orders like that, right? But it also seems a little bit too aggressive, right? So I'm sure that there are also some people realizing that there's these guys that now they got their move and they want out. And so that's why they're counter trend trading it. But from a tactical perspective for me right now, I caught the news move, and that was the place where I have an advantage, was when the market orders pushing it down. Now that I suspect that people are taking their profits, that's not necessarily a favorable market condition for me. So I'm just going to watch it here a little bit and make sure, keep an eye on it and make sure I know where they're positioning, what they're doing, in case they really just decide to turn today into another trend day. But for now, seems best to just kind of stay on it. Okay, so when I'm looking at this, like this one, that one would have been filtered out. That one it would have taken. That one it would have taken. This one it would have gotten filtered out. So the two trades that I thought were kind of bad would have gotten filtered out with the filter that I'm thinking about using. E-mini going down there. Look at that. This is stops. That's some stops for sure. Oh, I was like, why are they retweeting this fluff piece about Biden? But it's Joe Biden's Twitter account. That's why. Zero Hedge. You can tell that Zero Hedge is excited. As soon as it touched it, they were ready to tweet that they hit the low of the day. Because nothing makes them more excited than the Federal Reserve screwing up the economy. Okay, Indy took that one long. I wonder if we need to put a filter on Indy too. I don't know if Indy would ever take any trades if we put the filter on him. Okay, so did that? Yes, it did. Did you save that text for the Yada thing, or is that what I have in the video description? It seems a little long. Oh man, I had so many tickets last week because a few of you guys signed up, and like you get to a new tier level and it gives you a bunch of tickets. And then this week I've got like no tickets. It's not nearly as fun. FOMC soon? Well, that is, the FOMC minutes are 6 hours from now. So no. What do you have at 9 a.m.? You must be reading something different. So we get red book in 30 seconds. That's usually not a huge market mover, though. And then Fed's Barkins is giving a speech at the top of the hour, and ECB's McCall, I'm not familiar with him, is also giving a speech. But the FOMC meeting minutes are going to be at 2 p.m. Eastern time today. No, don't say FOMC then. Say Fed speaker. That's because otherwise I think that you think that there's an interest rate decision today, which it's not. Nomura on yields and stonks. We would expect only a mild downward adjustment in U.S. equities if the 10-year yield stays between 1.3% and 1.4%. But in a risk scenario in which the yield tops 1.5%, U.S. equities could correct downward more sharply by 8% or more. By the way, did Bitcoin react? No, of course not. They are a little bit higher today, though. Morning, Ace. You must have fun. No, I think that equities will be plenty of fun today. We should open up the stocks, shouldn't we? That 6:30 mess? Yep. So what happened was the PPI news came out, and it was like twice, the year over year was like twice the consensus expectation. So, yeah. It's just right now, some of some of the inflation data that we're getting is screaming like stagflation. So you're getting this situation where it looks like the price of costing goods is increasing, but consumers can't actually pay for it. So you just get economic activity just, flatlines. But anyways, I took a trade in the 10-year treasury and called it almost perfectly, and really happy with it. And it really moved. There was lots of orders going through, and that makes me happy. Now, of course, now you look at it, it is higher. It is higher. Okay, so at what point do we start to say that it's like too high, though? So there's kind of a spot up at 25.5. That's quite a ways away. 28, 27.5 or so. Yeah, I'm kind of reluctant to take any more trades in the treasury. So when I'm looking at it right now, that was what I caught was a really strong piece of news, and I took it with informed trading, right? We were a part of informed trading flow, essentially, where we had an advantage over the market maker. Now I'm looking at it and I'm seeing this looks like profit taking. We're actually higher than we were before the news now at this point. So that's like, I don't necessarily want to be messing with it. Okay, so there was a significant change there though in the book. That kind of makes me want to just go short right there. Yeah. Oh, well, it holds it. Now another thing that I am seeing is that the stocks did really puke there pretty hard. And I mean, they kind of trailed off first, but then there was like a little break, a bit of a stop run, and then they just really hit lower. And as we've done so, it's kind of been pushing the treasuries back up. So you get this push and pull thing. So it kind of depends on like, why is it doing it? So one of the theories was why is the 10-year selling yesterday? And one of the theories was, well, the market is just expecting increased market activity that is going to force the Federal Reserve to increase rates faster. And if that is the case, equities should be able to shoulder that, right? But now the situation is changing, and what we're saying is that we're getting some inflation, which is going to hamper economic activity, right? Which kind of almost suggests, well, in that situation, does the inflation force the Federal Reserve to raise rates? Well, I think that they would fight it really hard, right? Are there any cheap alternatives to a Bloomberg terminal? You know, I've never really looked at that. I have heard of some platforms that have, you know, data that I would suppose could be comparable to a Bloomberg terminal, but I think that you're maybe asking the wrong question. So here, the question that I would ask you is, what feature from the Bloomberg terminal do you need? What is it that you're looking to do? Going long there? Palantir looks like it's recovering today. What about the VIX? VIX is up. Okay. Oh, J. Why would you go short there? Nope. I really think I want to implement this filter today. Well, I think I just need to leave it there. If I search for Bloomberg terminal alternatives, you get a lot of choices. I don't know how much they cost. Okay, so you're saying like instant news so I get my trades in time so I don't miss big trends in the market like gold from yesterday. So first of all, the big move down in gold, I don't know if that was a news-driven move. Honestly, it was just kind of doing its thing because of the dollar. And I think that was driven by currency flows, and I don't know if there was news for it. If there was a piece of news that moved gold that you think moved gold that you know about now, I would love to know what it was. Because I have kind of been looking at that whole thing and wondering. But for that case, really what you need is just the news squawk portion of it, right? So there's a couple of good news squawks that are a lot cheaper. And I have a video all about this on my channel called Trading the News. It's a fairly recent video, so you can go back and search for that. But your two best options, in my opinion, are Rand Squawk, which is $250 a month, or Financial Juice, which is $70 a month. And I think that Financial Juice in particular, because it's so much cheaper than any other kind of news squawk right now, and I think that they do a good job at what we need them for, is a game changer for a lot of traders. So I have an affiliate link. If you go and find that video, there's an affiliate link in the description if you decide to do Financial Juice. But that's where I would look. And then there's a bunch of other ones like Zynga Bezinga and Trade the News and Talking Forex and the bunch of those. But I would look for a news squawk. No, Ace is just using NinjaTrader right now. Have you heard anyone talk about Brovid, French daily paper Le Monde, in regards to Brexit meets the second wave of... Oh, no, I have not heard that. I thought it was going to be some sort of brotherly love COVID sort of thing. I got excited, but then, no, it's just a Brexit thing? Okay, well... Oh, so you're about to... Oh, because you took that long already, yeah. Wait, what price did you get, by the way? Oh, no, it wasn't long. You took another short. Why did I think it was a long? Yeah, I don't know. I'm more of a visual guy. I know that you can come into the chart and you can just go, well, I don't have the chart trader turned on, but chart trader, I know that you can just come in and you can say buy, sell, yada, 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 but I don't. I'm not a huge fan of execution in NinjaTrader. I have non-terminal Bloomberg subscription 39 USD. No, that's just to get their front page news. I'm sure glad that I took my profits on that thing fast as soon as I saw absorption that they couldn't get through, because there is no way that I could have predicted that after that they would be up at 23.5. No way. You love execution in NinjaTrader? Nah, I think their DOM isn't very good. If there's anything that NinjaTrader needs to work on, it's their DOM. Something that I've noticed is that I think they understand that their ecosystem is their biggest selling point. Really, if you're looking for indicators and development and stuff, there's nothing better than NinjaTrader. They have the most extensive library out there, and it's the easiest to program with. And so I think that sometimes they will see a weakness in their platform, and they will say, well, we don't want to mess with that because this vendor does that, and we don't want to screw up this vendor. And for instance, that was the case with order flow. And they basically would hold on to that until it became like, people are saying, oh, but you don't get the order flow tools by default in NinjaTrader and you do in Sierra Charts. And so then when people started saying that, then I saw NinjaTrader went and did it. So I'm like, yeah, the DOM is the weak thing. And if NinjaTrader had a good DOM, then it'd be great. You use the chart trader. Well, when you use the chart trader, do you use it like this thing over to the side and you just do that? Or do you come and right click it and then do buy limit, sell limit? Because that's where I start to have an issue, is that like when I get in, it should be one click. When I get in, it should be one click. I guess you could do here buy market, sell market, or buy bid, sell bid. I guess buy bid, sell bid would be good enough, right? You always says you do them right with the right mouse button. Well, that's the thing that I can't handle. It's like, okay, right click, buy limit 1. There's like 4 options. No, thank you. No, thank you. I'll stick to my jigsaw DOM up here. Okay, so there's 24.5. You can also make a hotkey. Yeah, that would be useful. I can set up hotkeys in Jigsaw, but I never do. Or I'll set them up and then I don't use them. Because I've only used like one contract. If I was trading like 10 contracts, then I think you kind of need to have your thumb on that puke button all the time. Oh yeah, that thing in the background is not. It's a Jolteon. Why did he fall over? What's the? There we go. I didn't realize I froze the chat for the last 2 minutes. No, I didn't. I was just talking about the trader. Yeah, he was saying that he uses the hotkeys. Anyways, I just think that the DOM is so like the thing that I have an issue with is that have you ever noticed that I'll do things like I'll be like, okay, I see something going on here. I'll do all of these prices and take them if they'll give them to me. So like what I'm doing is I'm making a decision that all of a sudden, yes, I want to be positioned long on this, and I'm willing to take on inventory as I do it, you know? And so I need the ability or, you know, have a stop. I want to move my stop in, you know, all of these are like single click and drags. And so I can place a large number of orders. I can set up a complicated array of orders very quickly. And that's what I like about it. I missed this year, Kurt. Yeah. Well, it's not as good as the Jigsaw Dom, but it's better than the Ninja one. Oh, man. I bet you that my robot took it on the nose on that one. Yep. He's catching a few winners, but he's doing really poor today. So yesterday, I didn't expect my robots to do very well yesterday because it was kind of a difficult S&P market, and they did amazing. And now today, well, it's not as negative as it was yesterday, but of course we're like just getting started, so who knows how bad it gets. But today they're just trading terrible. Especially interesting since Jay kind of started out okay. But that's okay because I think we can make some changes to him. And it is in the S&P 500 right now. It looks, slippery. So that's when Jay in particular would do poor. With Jigsaw, oh, I know who you are. Goodbye, Salim. So what he was saying though is objectively not true though, right? With the Jigsaw, you can place the order anywhere that you want, even when it's moving really fast. Now we have had some periods recently where I was using CPU on the encoding and I didn't have enough power, so I fixed that. And now it's pretty smooth all the time. So they've been at 24 now for quite some time in the 10-year. Oil took a dive, by the way, the last 10 minutes. Ooh, oil took a dive the last 10 minutes. Oh yeah, we did get that manufacturing number. And look too significant. Is today Ash Wednesday? No. So, but my mom is over babysitting him right now. No. See, here, the nice thing about having your own YouTube channel and your own YouTube chat and everything else like that is that you can just do whatever you want. So if somebody is doing something, what did he do? He's Salim. You could not tell? I don't want to reveal my tradecraft about how I knew, but I would remember yesterday when I said, okay, well, he was this person and now I think he's this person. And then here again today, he did other things that confirmed it. So I kicked him. But he seems to come in like every other day. It's now his thing to try and harass us. But it doesn't really do anything. Because I almost immediately know who it is. and just ignore him. But anyways, so there's people there are some people out there that apparently I am their arch nemesis. There's some guys that just talk about me all the effing time. Which is like, oh, this guy runs a free stream. That's so terrible. Oh, he's scamming all of you guys because he has a free stream. It's like, what? But that's what some of these people do is like, you know, especially if you're like trying to sell something. Oh man, the power of like, you know, organizing people against a common enemy. The whole common enemy thing. So picking somebody that can be your common enemy for you is a pretty effective tactic. And some of these people that get into trading, man, I mean, come on. I'm not, you know, traders can be some of the brightest people that you know, but that's not everybody that tries to get into trading. There's lots of people that try to start trading and are just so gullible, you know? And so, yeah, but I don't follow them. I never pay attention. I don't care what they say. You know, some other creators who have the same problem. Somebody just doesn't play well with others, get spams, block, and then create multiple accounts to troll. Yeah. Well, it was kind of funny because it went for a long time where we didn't see anything from him, and then I need the ability to shadow ban is what I need. How do you you know, how do I shadow ban somebody is what I want, so that he thinks that he's still talking, but he doesn't know. I really wish I could do that, but maybe in the future YouTube will add features that will like so that I can restrict it. You have to have a certain like kind of verified account or something like that. You gonna go short again? Oh, 19 short. Oh, you're still in your short. I get you. No, it doesn't. I say things that oppose you like a rhythmic and crap. Oh, so is Tommy Berkston is also Salim, and he saying things that are objectively false. Jigsaw doesn't skip prices. And the rhythmic data is better than the CQG data. It's better in that you get more prices and you still get like the same pace of orders coming in. Oh, it was a typo. You just went short at 39.1050. But of course, that's one of the ways. That's the best way to know that it's him, because he's literally the only person in the world that will say that. It's like he came in. This is what I think happened. He comes in and he starts a futures account, and they say, okay, you can pick between CQG or Rhythmic. And he looked at it and he saw that CQG was cheaper. So he went to CQG. And now because that's the decision that he made, that's the greatest thing and everything else is crap. Well, this is not I like that. In terms of like the flow that you get for all practical purposes is exactly the same, and the difference is that Rhythmic you get more price levels, and CQG you get indexes and stuff. Well, I think especially for the S&P 500 that they just don't give you enough price levels for, I can't do the kind of analysis that I do with my indicators and my robots and stuff on CQG. It's just like literally not possible. What's the problem with CQG? There's not necessarily a problem with it, but CQG only gives you 10 levels of market depth, right? Which means over here at 11, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That's as far as you would see, right? So I wouldn't be able to see that if there's a big order at 3907 or not, right? There's one at 3900. Okay, well, nothing too significant. Is there anything above us? There's a big order at 3925. Okay. Sometimes, like yesterday there was a really big order up there at the top that they never got to, right? And that mattered. It really mattered. Oh, sure, I thought it had errors in showing data besides the 10 level thing. No. But that's the thing is Salim here seems to be convinced that there is. He thinks that Rhythmic, displays things incorrectly or something. Yeah, I got screwed. Yeah, that I'm surprised that they didn't go up and tag that order. I'm surprised that they didn't fight that harder, because it looked like they made a good attempt on the first try and then another attempt that they would have went. But I guess there was a big options wall there, and so maybe that's why some of the traders weren't as aggressive as they could have been, right? What do you use? So I'm using Jigsaw Day Trader and Ninja Trader 8 for the charts, and I route them both through Rhythmic data. What's the hype about kinetic data? Nothing. I mean, kinetic is basically just CQG branded for Ninja Trader, right? If I recall correctly. I started to get them mixed up. Probably he got owned by some slit, but Jin blamed the data for that instead of the poor stop offset. Maybe, I don't know, but he seems to believe that the Rhythmic data isn't as good as the CQG data, and he seems to think that the Jigsaw DOM isn't as efficient because he just uses a CQG trader, which is like, oh man, do I have the CQG trader installed? I wouldn't be, yeah, I do actually, but I wouldn't be able to connect to anything. But I can load it up and see if it will let us see it. Because you look at their DOM, yeah, it won't let me log in. It's not gonna work. There's like no features on it or anything like that, right? But the Jigsaw DOM is very efficient. And you can set it to whatever update interval you want, and he even doesn't need to stand that if he is an amp. They have zero. Yeah, I know, right? I don't know why he would. like the Rhythmic and CQG applications aren't necessarily built to be like the great platform for you to use. It's just to like, I think that they pretty much assume that you're going to connect a different application into it. But again, that's why I was saying, like, I don't like giving up my tradecraft, but I guess it's worth it for the point. He is literally the only person in the world that will say that stuff, right? It's not like there's some group of people out there that like, oh, they all think that the CQG data is way better than rhythmic, but no, it's not. Like, nobody cares, because any differences in the data are like so negligible that they just don't matter to somebody that's trading discretionarily, and probably not even matter for people that are trading algorithmically. Well, how deep are they going to go today? Are we going to touch 3,900 before the open here? Oh, no, wait. It would open is right now. Okay, so here we go. Treasury's still moving up. Initial move down. It's down, but it wasn't accept. Oh, okay. 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 So there was a real sweep there. They recovered that. It looks like they're buying it. There's definitely some absorption there in that 07 area.
Block buy.
I don't know if that move alone was enough to make me feel like I want to buy it. So did they just, where was that block buy at? 27.5. Wow. Okay. Class action lawsuit filed against DFV alleging GME manipulation. Do they really have a case? No, they certainly don't. So the only way that you could hit him for well, we should read the court case affidavits, because are they alleging that he said something incorrect? Because I can come out and promote buying a particular stock in the public view all I want, as long as the information that I'm giving is accurate. Even if it's just we should all buy it so that it'll go up. Of course, you shouldn't say that you will make money, like pump and dump is not going to make you money. And if you say, oh, pump and dump is a great way to make money, then of course that's not going to be true. But also thought it was stupid. Yeah. But they're gonna go after him. That's the thing that's so crazy, is like a retail trader gets lucky and they go all after him. You say 12 is key level? You mean 3912 on the E-mini? Well, yeah, I do kind of see that it is now. I'm still a little bit weary about touching it here. Like I certainly feel the desire to go short, maybe not at the low of the day, but it's a little bit too wild here. If I'm gonna take a trade, it's either got to be as she goes and get out really fast, because this thing is whipping back up really hard. Do you think they'll treat DFV similar to that Indian guy that they say caused the flash crash? Well, I think that they're fundamentally different cases. So the first thing is that I have yet to see any evidence of DFV doing anything wrong. Okay. The Flash Crash guy, I wish I could remember his name, but the Flash Crash guy did something wrong, and he knew what he was doing was wrong. I mean, he straight up knew how it worked and what the robots were using, because he was losing money from it. He used to be really great and was the market maker and made a ton of money from it, made millions of dollars from it. And then the robots came and it stopped working, and he knew exactly why and how to mess with them, right? Nav, was it Nav? Yeah, he was a British guy. Well, he's you know, he's Indian, but he lived in Britain. Anyways, but he knew what he was doing was wrong. He just thought that happens all the time and that nobody will ever get punished for it. Nav. I should just remember Nav. Yeah. He knew that it was like against the law. He just didn't think that the regulators were ever going to go after it, because they didn't. He's a British citizen. Oh, yeah, okay. Whereas this other guy, it appears that maybe he was doing stuff on his YouTube when he was still employed with somebody that he shouldn't have been doing. But I don't think that they can hit him with anything that, you know, they could like take all his winnings away or anything like that, you know? Why the derision? Well, he's kind of like I don't know how to put it. He kind of fits into a certain kind of Indian stereotype, because he was just like very, very mathematically minded, and I think that he even had Asperger's a little bit, and he's of Indian descent, but he lived in the UK. I don't know if that's not a bad thing, but I still think that it's like relevant to who he is. Don't you think? Did he really cause the flash crash? I guess it was kind of, I don't know why I necessarily brought it up. It was just, when I think of the guy in my head, I think, oh yeah, it was that Indian guy. But anyways, did he cause the flash crash? Well, a lot of people argue that he was unfairly blamed for it. I do kind of feel that it was like he did something illegal, but to say that alone caused the flash crash is, I think, a little unfair. Can you imagine what would have happened if we had never experienced the flash crash and that stuff was still going on when the volatility crash came in 2018? Holy crap. So in reality, Nav actually kind of did us all a little bit of a favor, didn't he? Man, it is going and going and going. So you're still kind of getting this fighting that makes me nervous about trying to pick a spot. Yep, he was just a scapegoat. I think so. The thing that I think is so awful about that story is that he was a great trader and he made a lot of money legitimately, and these other people basically scammed him out of it. And so he didn't have any of it. He didn't have any of it. And he was doing like the right thing. He was like, I mean, I really admire the guy. Don't get me wrong. Whenever we talk about it, maybe it might come off like I don't like him because I say like he did do something that he knew was illegal. Nobody ever got punished for it. So he thought, I'm not going to be punished for it. It's okay. It's like a rule, but it's really not a rule because they don't enforce it. You know what I mean? But I really admire him because he was a good trader. He was a pure market maker, and he made tons of money. And then he like didn't let it go to his head. He just continued to live like a normal guy and just stowed it all away and didn't do anything with it. And then the money managers screwed him over. Like he gave money to these guys, and I think that they blew it, or like it just like straight up disappeared. You know what I mean? Yeah, he thought he had money saved away. Yeah, he had given his money to certain money managers, and then when he needed it for defense, the money didn't exist. And this guy, you know, there's a couple. So when you watch the best documentary that I've seen about it, there was this guy that he's like, you know, I've done so much investigation, and I know that it seems like really suspicious. Like, how could all of that money be gone? But I've, you know, done all of the research, and maybe he is like really, really crazy smart, and he found a way to hide it from us all. But I'm pretty sure that the people that he gave it to just lost it. And yeah, like they've done a pretty heavy investigation on that, and they're pretty sure that those money managers just basically scammed him and lost the money that he gave them. Which is kind of like, wow. If I had millions of dollars, I wouldn't, you know, I might, sure, I would diversify and give some of it to a hedge fund, but I wouldn't do all of it. It's not the majority of it, you know. In fact, probably the majority of it, I would just keep in the safest investments that I could, indexes, funds, and bonds and stuff. In fact, you know what I think I would enjoy is you know, if I was like a multimillionaire, like let's say I had $100 million, okay? I think I would need to have $100 million to be doing this sort of a thing. But just going around and, you know, like buying municipal bonds, being like, oh, here's a community that it looks like it's a pretty good community, and they actually need the money, and they look like they're going to be responsible, and I'm going to lend them the money. I'm going to buy the bond from them, you know, and spend all of the time researching and investigating that companies, things like that. I think that would be a really productive use of the money, and it would be fun to, you know, because there's so many options, and you can really dive down into, you know, like what is a community like, and or what is this company like, in a way that I don't think you do with stocks. You know what I mean? That's where I think if I had millions and millions, I would put a lot of it into bonds. You know, so you get to a point where it's like the amount that you make off of the interest from your bonds would be enough to support your lifestyle, you know, once you get to like $5 to $10 million. So. Are you talking about Steve Sugar, the editor of True Wealth, an investment advisor specializing in safe alternative investments overlooked by Wall Street? No, that's not what I'm getting into, but I digress. Someday when garlic coin is worth $1,000 and I am a multimillionaire, I will sell the garlic and I will buy bonds with it. Until then, though, most of my savings going away to pay for kids' college. Okay, so they're back above the open. That turned back down, and it's pushing up really hard. But if the E-minis turns around and is like, oh, we're gonna just retrace this whole thing, and today is gonna be a bull day, then will the treasuries crash again? This whole thing is just gonna be like, I'm just no. It's well, and I sit down and I'm like, why haven't you taken a trade, Seth? And it's like, well, I could have, but then I think that I'm subconsciously thinking back to times that I've seen markets like this and I got screwed over because I overtraded it. You said college is overrated? I never said that. I certainly never said that. Bids dropping in volume, says HF. Are you talking about in the E-mini? Or are you talking about in the treasury? I don't know, man. It's interesting. So one of the things that I'm noticing about Jay, by the way, with CoffeeZilla, remember? No, I don't. You must be thinking about somebody else. Or you must have, oh, you were saying when I was talking about it. So there was an argument between, like, it was a live streamed argument between CoffeeZilla and this other guy. And this other guy said that college was overrated. But I didn't say that college was overrated. And I did not intend to say that I supported that other guy's argument. I thought that other guy was nuts, and I thought CoffeeZilla just absolutely destroyed him in his argument, because the empirical evidence is that you will be more successful in life if you go to college. Now, I will say that there are some degrees are better than others. Some degrees probably aren't worth very much. See that one right there, that long? That one doesn't make sense. Oh, that was a joke? Oh, okay. Yeah, no. No, I'm saving up. I'm expecting like one of them might want to do like a doctor, stuff like that. So I'm gonna save. And with my wife working again, we'll be able to pocket away, you know, so that she's divorced, and so she gets child payments, and I believe that those child payments can just go to paying their school. So I'm excited about it. My lips are really chapped today. Gosh, maybe I need to go get chapstick. Well, now they're going. They haven't stopped out the ATR stop, by the way. That's another thing. Isn't the government guaranteeing loans on education? I don't want them to have to pay for a loan. No. Every dollar that I can just save up and put into the markets and make money off of the markets moving up is a dollar that they don't have to pay when they start working. My parents, they helped me. They paid for school along with scholarships, and I think that they should be able to get them. Oh, nice, Dad. I love you. Aw. Too bad it's not actually one of them. Sometimes they do watch it. Do you have a 520? Yes. That's how we're going to do it, is through a 529. Yep. And Utah has one of the best 529 plans, apparently. But I haven't gone too deep into it because I haven't been putting money into it, right? Like I was like already, like we had everything squared away. So like the history here is, oh man, we haven't talked about this in a long time. When we started the channel, I didn't have a yard. So we had money saved up for the yard, and we paid somebody to do it, and then they ran off with it. So I had to do all of the work myself. And we did the yard. And then when we finally got through with the yard and everything else, then it was like, okay, now we can like really start saving up. And then the pandemic hit, and my wife wasn't working, and we had a baby. So it was like, no, we can't really save it away now. But now that all of that is away, and looking at what I expect the cash flow to be now through the rest of the year, we should be able to start saving up a significant amount of money for them. How much money was it? I don't remember anymore. It seems so insignificant now. I guess I don't miss it, but it was like, it was more than 1,000 for him he was going to do the grass, and he just ran away. Ugh, I don't remember the guy's name. So I did everything to try and like sue and get my money back. And you know, like I did all of the court documents and everything, and then you have to serve them to the guy, and they couldn't find him. No, he wasn't Mexican. No, he was like Samoan. It was a Samoan guy in Salt Lake. But the funny thing is that they tried to run like a double scam. They're like, oh yeah, we're not doing it because it had a death in the family. And then these other guys came in and were like, yeah, he's just not doing it. We don't think it's right, but we'll do it for you if you pay us. And they did a day's worth of work. I'm like, no, I'm not going to pay you because I don't trust you at all. And I'm pretty sure that they were just trying to scam you twice. So DFV helped to correct an inefficiency rather than exacerbated one. I agree with you, Jokel, 100%. Yeah. There's an inefficiency in the market that has been created by long short equity funds that retail traders haven't been able to take it, haven't been able to eliminate because the long short equity hedge funds are too big and they finally got screwed in. The market is better for it. Being debt-free is a blessing. I come from a not so well-off family. I was able to pay my engineering tuition in a year working for the government. Yeah, right. Exactly. So it's like, when I look at it, the environment that I'm seeing is, they talk about the K-shaped recovery. Like, that's what I see. Government comes in and gives you stimulus. A certain group of people, they need that money to survive. Or they're just not too bright and they blow it on a TV or something like that, right? And then there's this other group that is doing fine, and so it's just extra income. And what did they do with it? They put it into the markets. Now, some of them are going to put it into the markets and just lose it. But, when I put that money in there, I don't actively trade it very often. I take very, very small ones here and there. Really should have gone short in the treasury when I was thinking about that, when I called that out. I was kind of waiting for the S&P 500 to turn up above the ATR to see what would happen. And now that it's there, I'm kind of like, I'm not so sure that I can just try and take this as a trend. Joko says, oh, I wasn't cut up. I thought you were talking about the... No. We're talking about something else now. Anyways, those people that put the money to market, if we get a really inflationary environment, then maybe they just keep up, right? But all of those people that weren't able to do that, they're just falling more and more and more behind. And so I know, like for me, I've done everything that I want to do, man. What else is there left? The only thing left to do is to become a garlic millionaire and then lose it all in the futures market. That's it. Lose $1 million in one day on the futures market. And then my life will be complete, right? So there's no point for any of it. It's for the kids. And I don't want them to be the group that's caught falling behind all the time, right? No, so we're going to save it away, put them through school so that they don't have to take out the government loans, so that as soon as they start working, they can start saving away the money too. Say the gap is filled. Well... You must be talking about just the overnight gap, yeah. From yesterday's low. Yesterday's low was 38.18. That's probably why you saw all that stoppage going up above it. Oh, I'm like totally not even paying attention. Okay, yeah. Bye. Anyways, I do think that naturally the disparity of those that are able to save and those that aren't will always widen due to the nature of world economics. You need money to make money. Well, I don't think that it's the nature of world economics per se so much as it is the nature of world economics right now. Right? But I do think it is a concern. Like, there are a lot of skills that just aren't going to be as valuable, right? I argue that there will always be opportunity, and that the further along we get, the more opportunity there will be. But there are a lot of opportunities that are around right now that won't really be a thing anymore. Nobody will pay for it. They'll just have robots do it, you know? And if you go back and you say robots do everything, like if we really have like true artificial intelligences, you know, that are humanoid and can run around and do anything that you want, you know, like when we have like full on robot butlers and stuff like that, right? So then what are the things that you can do as a human to add value, right? Then there's only 3 things that I can think of. And that is owning things, managing things, and creative things. Those are the 3 things that I don't think the robots can do for you. So that means, yeah, you're probably going to want to go to school. Well, it definitely slowed down when they had that stop run above 39.20. Look at it, just kind of really trailed off. And after that happened, the imbalance is very much, you can see it all the way here to 15. So I guess I should wait and see if they hit into that area. Depends on if you are looking at absolute or comparative quality of life too. Yeah. Well, no, one of the things that I think is kind of interesting about that argument too is that people don't consider the improvements in quality of life that are going to come through, right? Like once we start building homes with printers, and I know there's like those concrete things. I don't think that that's it. I don't think it's interesting technology, but probably the real thing is still a couple of years away. But once they start making like homes that are like half prefabricated and half, 3D printed, you're going to have a house that's literally like, a tenth or even maybe even 1% the cost of a home today, that's going to make a really big difference in the economy, right? You won't have to be paying, a mortgage that's, can you imagine if your mortgage was 1/10 that it is now? Or if you paid it off, everybody owned their home? It'd be totally different. Like a lot of people wouldn't really have to work very much. Here comes the housing lobby. Nah, they won't be able to do that. The skill for the ability to create has slowly been phased out, which just makes higher education even more valuable. It's encouraging that mentality, which is, well, the hard part. Yeah, I really think when you think about them, so we're talking, really we're talking about coming automation, and what do you do for the economy for that? And I think that one of the reasons why you have so many people that want to go for something like a basic universal income, which I don't think would be a good idea. And they say, well, there won't be any jobs. And I always say, well, there will. There'll just be new jobs. There'll be completely different kinds of jobs. And they're going to open up industries that you'd never dreamed of before, right? Well, I think that the reason why people gravitate towards this idea, though, is because we've conditioned them to do so, right? The whole school system, everything about the way that our society works, is basically preparing you to be able to work a salary job. Go in, put your hours, spend time to make money. And, that's the way that you're trained practically from birth. And that's not going to work in that economy, right? In that economy, everybody has to have an entrepreneurial mindset. Because again, you're either going to have to own, manage, or create. Those are all entrepreneurial things, right? Everybody will be an entrepreneur. It'll be the entrepreneur microeconomy where everybody has some product or thing that they're making and promoting and selling. And they'll make just a little bit of money from it on a regular basis. And that'll be enough to pay their bills. And you won't have to make a ton of money because things won't cost very much, because automation will make everything so ridiculously cheap. Right? Stupid Boss says yes. Well, so they came back down and then immediately rose back up. There's the index is just being indecisive, I think, still. Like, you think that move up was like, it's game on. We're gonna retrace it all again today, but I'm not so sure about that yet. And the Treasury, well, the Treasury, there was that down move, but like, say I had gone short at 27.5, I would be sitting here wondering, like, should I take it off or is it gonna go further? So that means I don't necessarily know what to do there. Oh, Gren Greenwald always has some of the most interesting points. I find it odd and a little more than a little disturbing how little interest there is in the question of whether the point-blank shooting by a police officer of an unarmed Ashley Babbitt was justified, especially after the police protests of last summer. The indifference is striking. How much does News Squawk cost again? So it depends on which package you get, because there's a couple of different packages. But if you get like the interest rate package, which is what I tried, it's like $250. I think if you get like the combination everything one, it's like $350. Now this is interesting. David Portnoy has become a no-coiner?
When I take the girls to yeah, he says that's interesting. Yeah, he's pretty much saying he's never gonna. He thinks the whole idea behind it is nonsense. Well, I do too. Okay, so the indexes are turning back down now. Oh, I totally screwed that up. Control X. No, delete. Okay. So it's still slow there. Okay. Vlad says everything is kind of beaten up. Yeah. WineTube asks, how much does index and resource packages cost? Doesn't say anything. Yeah, I'm not exactly sure. It's going to be between $250 and $350. So the way that I would look at it is if $250 to $350 is too much for you, then you should go and do Financial Juice. Otherwise, you should do that and get New Squawk. Okay, so there's another good little buy there.
Of course, Jay's gone short on it. That's funny. I don't want to watch that actually. So. I'm looking at him now and I'm kind of wondering how can it be so bad? The performance on it is drastically different. Normally one side of that it hits 80% and it's not getting even close to it. Is it just because of the increased volatility? I suppose it could be. But it's stopped out now. Like it's off now. That's its limit for the day, so. It's rangy. Yeah, it's still... I mean, that move, but the way that it moved back up there kind of suggests that they're going to go for a high again. But once you get up into the 20s, it kind of like the recovery kind of becomes a little questionable, right? Can equities really shrug this off? What is included in your elite indicator package? So if you go to the website speculatorseth.com, I have right there on the front page a brief description of the indicators. There's also a link on there for the detailed description where I go really deep into what they are and what they do. I also have a video on my YouTube channel where I explain them. But I will very quickly mention two of the most significant ones that I have is synthetic dollar index, so that you can see the dollar index without having to get ICE data. Spreads. I'm showing a spread over here with the spread between the S&P and the RTY. I have a couple of little enhancements made to them, make them better than the ones that are out there that are free. And then the real reason why I charge what I do for it, this inventory cost basis. So this is tracking average positions. Right now, I don't know if it'll be too useful. If you come back tomorrow, I'll give you a really good example. So, yesterday, so this dotted line right here, kind of the blue dotted lines at the bottom of the screen indicates the point at which all shorts are losing money based on their averaging positioning. So all longs. So we're saying this is the average price that the longs are long from, and this is how much money they've made on the day from their market making activity, compared to how much inventory they still have on, what they can afford to lose. So you will find it's quite common for them to come right to that line and bounce. And that's how that works. And one of my robots that I take is actually based off of this information, and it works out pretty good. So that's what that's all about. It's a very complicated algorithm, and that's why we charge. I don't necessarily want a ton of people to do it. In fact, I will limit it. So I've went and I've done the math, and if I have more than 100 subscribers, then I will start increasing the price, essentially, instead of taking on new subscribers. Because according to my own stats, that's the number of people that we could comfortably trade that with and it not really affect the edge. So you say it's about to break down? Well, they turned in a little bit. They definitely turned. Squire's still not taking any trades. That's interesting. Oh no, Prince Philip has been admitted to the London hospital. Well, if Philip goes, I don't think that his wife will be much far behind. You say Delta is weak on that push back up? So, first of all, when we come back over here and we look at this and we say, okay, well, so what does he mean by that? You can see that the cumulative delta on the rise is not necessarily significant. But the question is, how did it do that? And I believe in that particular instance, the answer is that the market makers didn't want to take on the long inventory and pulled because it was a very aggressive order flow when it pushed up. So I would not necessarily read that low volume as it's likely to retrace. So how is that dishing out on British people? When you're really old and your partner dies, you are very likely to follow soon after. Like your chances of dying increase significantly. So I see Discovery Trading Group saying an overabundance of optimism or terror, coupled with a near universal agreement in one-way narrative centered around it all makes perfect sense due to X. Always tends to end the same way, just saying my 2 cents. Quoting Lisa Abramowitz, Citi sees limited upside for U.S. equities and a 10% pullback in U.S. shares as very plausible. Okay. Queen is immortal. So does that mean that he thinks that there's too many people that think there's going to be a pullback? Or I don't know. I can't tell you how many times I heard people say, it's going to fall. And so many people said it was going to fall, and for 10 years it never did. Oh, why did I not? Yeah, okay. Is your trading based on order flow? Partly, yes. But so here's the thing, is that I'm not the market maker, right? So I don't really have the ability to trade the way that the market maker does. In order to do that, I would have to absorb multiple contracts over a certain period and adjust my take profits and so forth as such that on average I break even and just make the spread. And there's mathematical models that can do that, but part of the reason that they're able to do that is because they have a big bankroll, right? If I just want to trade one contract, I can't necessarily do what the market maker does, right? So instead, what I'm doing is I'm looking for opportunities when it looks like I can beat the market maker, right? So one of those places is going to be in situations where I'm seeing what appears to be informed flow, forcing the market maker to pull. And that's when I can take a trade and just kind of let it run, right? So that also means that I can't just rely just on the flow, right? So what I read now is there was a pretty strong push up. It retraced. So it wasn't, and I didn't hear any news, so that probably was just trend following. Now it's kind of skidding along the bottom, but they're like right at ATR stop. So probably, well, I don't know. They often go for that ATR stop, so they might turn back down and break it, and then we'll see what happens. But might turn back down a little bit further and then retrace and go all the way back up to the high. I don't know. But see, am I seeing something that really tells me? No, I could guess. I could take the momentum. Not this particular one doesn't qualify. You could, but you are going to see some people trying to follow it there. Why gold is down hard? Why do you think? Yeah, so I think that the key driver for gold here is the dollar. And the dollar is up. So the dollar's up, then gold is going to come down. It is an interesting situation, isn't it? Because the whole thing is we're expecting inflation in the future, so shouldn't gold be doing better? Well, I don't know. Maybe the trade is too long and people are getting stopped out because of the dollar strength. But on the same token, if this all just kind of works out and we don't have a market crash here, then the dollar should continue going back down and gold should recover, right? It sure is breaking through some critical levels though. Frankly, some spots at which I'm starting to wonder if some CTAs will start to get involved. But you're not seeing it quite. The chart doesn't look quite the same in silver, which is kind of where it gets interesting. We should come in here and check things, by the way. What's up? VIX is up 5%. Rare Earth Resources taking another good 10% move up today. Ooh, that makes me happy. GameStop, another little bit of a dive. Yeah, silver is down just a little bit. Okay, even he turned back down around there and is heading to the open, and there is that ATR stop I was talking about. Treasury's pushing back up though. So that moved down. I was thinking maybe ATR stop and we can go long now, but because the Treasury is ticking up, I'm a little weary about that one now. Oh, I guess it's Asher time. He could bring me just like one toy. How you doing? You can't see him, but I got Asher over here. Gaga says I'm buying more gold. Well, as long as you're doing it with money that is risk, I don't know. I still think that the long-term perspective on silver and gold right now looks okay. So what I would expect to see is an increase in inflation. I was thinking more towards the third quarter of this year, but now it's starting to look like it could be the second quarter of this year. We'll see inflation. And if we do see inflation and stocks hold their gains, we don't see like a complete flush, then I think that the outlook for gold and silver could be really good and could be really good for some time at that point, right? You got a car there? Yeah, Trump will be busy with lawsuits for the rest of his life, says Lawrence Tribe. Probably, to be honest. Can you show me it? Yeah. Oh, man. You can't see him, but I have the fight stick out on the table, and he's playing with the fight stick. That's what he's holding in his hand, is the fight stick. Thank you, Kaka. By the way, it's nice to see you again today. I was just thinking, oh my gosh, yesterday. So yesterday, I have a medication, right? I have a medication that I take that's quite expensive for my colon, because I get like ulcers in my colon. And the Express Scripts, which frustrates me so much every time, because basically every time that I try and get my prescription, they say you can't get it right now, or it has to be, you have to wait, or whatever it is. So like, I'm out. They gave me a 90-day supply 90 days ago. It's been 90 days. I'm out, and they're saying that I can't get it filled again until March. So like, I call and they fix it, and they're like, oh yeah, it's good, and then we'll ship it out to you tomorrow, and then it'll get you there like a day or two later. And I'm like, great. And then the weekend goes by, and Monday comes along, and they say, oh, we see the order, but we're canceling it because you're not allowed to get it until March. So I have to call in again, and the lady was nice, and I tried to be nice to her too, but she didn't understand. I was like, this is what they're always doubt me for some reason. And so I went on the big long rant, like, they give me this every time because it's an expensive medication and all of this stuff. And like, that's when I realized, like, you know what? I am ornery because of the inflammation. Even though I don't actively feel it, my body reacts to it and shows the stress. And I got mad at them. And then I was thinking back, and I was like, I've had maybe yelled a little bit, ranted about things a little bit more than usual the past week. That's probably why. Okay, so they're still just chilling right there below the open. I don't know about that one, Asher. What do you think? You're bored now, taking a break. I think it's great to check positions on your phone if you're a swing trader, but to try and make a living, it seems iffy. I totally agree. I don't think you want to use the phone. What's wrong with using a phone? I seriously don't know the answer. I just don't think that you have very good control. Like, the thing that I would be looking at is, like, it starts going down. Let me put it a different way. Part of how we make money is because of people that trade on their phones, because a piece of news comes out and I hear it and I can immediately say this is going to become a trend day because of this, and I can take it anywhere that I want. And then I know that there's all these people that trade on their phones, or they don't look at it until the night or whatever, that are going to have to make moves later, and I can rely on them coming in and being late to the trade. Do you want the car back? There you go. Do you want me to... Oh, okay. So you don't want that. Okay. Okay. Look at how big he's gotten. You got so big, my friend. He's a big boy. He's a 95 percentile boy. Big. Except for his head. His head was maybe it's evened out now, but his head was small for his. Is there a way to set one order cancels other ID when using the managed approach in NinjaTrader strategy? Apart from switching to the unmanaged approach, I do think there is, but I don't know. I would have to go and open it up, and I don't have hands at the moment. We can look at that in a bit, though. I wish Bots was around. He would know. I only use limit orders, so I think execution speed isn't my biggest issue, perhaps. Well, yeah, except for that, and when you're in a position and something like that happens, and it's going to go and hit your stop, right? Asher, you're so cute. You know, come over. You can come over any week you want nowadays. Because I'm immune. Sounds like you're immune. Are you immune? No way. You have if you haven't had a shot, though, have you? Maybe we need to wait until Ace has a shot. Not that he would catch it from coming over here, but. Mansion won't back aid provisions that violate budget rule, which means that there will not be a wage increase, and there's some other things. I forget. There was something in the CBO that they said that it would change the deficit, and so it would match. And the Democrats were saying, "Oh no, like we can do it anyways," and Manchin is saying, "Nope, we won't let you do it. You can try and shove it through anyways, but I won't vote for it," which would mean that it won't pass. You gonna say something? I hope I'm not making a ton of gross mouthy noises today. My mouth has been kind of dry and my lips are chapped and stuff. Well, I was still kind of thinking about stocking a trade here, kind of leaning long, but holding the baby. So I think that our trade in the treasury was good enough. Honestly, like I think back on it and I'm like, you know, that's the kind of trade that I really want to take. I really should just take only those. You say Weeble is hard to work with? Really? You know, I have a lot of people that say that they liked him. How old is he now? He is a year old. He was a year old a week ago. Yeah. You're going to start talking for people? Can you say bye, bye, bye? Bye, bye, bye? No. Okay. Yeah. Huh? Is Asher named biblically? I mean, we took the spelling from the Bible, yes, but I didn't necessarily name him because I wanted a Bible name or something. Teach him how to read a chart from a young age. But the chart, this is the thing is what I'll teach him from a young age is that past performance isn't necessarily indicative of future results. The issue is, oh, you're new to it. It's okay. It's okay. You're new to the stream. Most of your chart patterns don't really work. Oh, geez. I had Wi-Fi go down once in a trade and was all in and up 30%. And then when it came back, you were down 80%. Wow. That's awful. You touching the mouse? You like my mouse? He agrees with me right now. All he sees is colors on the chart. He can't read the news. I can see young Asher getting banned and blocked for just agreeing with his dad. Can we talk about this for a second? Because obviously there's one person that we've been banning that, like, we know we've banned them multiple times because they're just annoying. But I keep running into this thing where, like, I'm looking to have like a good like detailed. So, like, basically, I will run around and I'll read all of the forums and all of the Reddit looking. Oh, no. What did you just click? Oh, no. Oh, no, buddy. Oh. You minimized everything. You minimized everything. I don't know why you clicked there, but you minimized everything. We got to bring them all back for the people. Oh, not that one. We don't need to see the errors. No. Okay, we're gonna put the mouse. We're gonna put the mouse. Oh wait, we gotta open these ones up too. Dun dun. Oh, Grandma's coming back. Anyways, so I'll be looking. I'm always looking for new stuff. Like, you remember on Monday we were looking for books, because what I'm thinking is, okay, are there any new trading books that come out that maybe propose new trading strategies that aren't well known? I'm always looking for what the new thing is, and I'm constantly frustrated because everything that I see is basically stuff from like 20 years ago, like unless it's like machine learning. So, you know, that's really frustrating to me. But so I'll come in and I'm, say something and looking to have like deep conversations, and then I get these people that will respond, and I just feel like that for some reason the people that choose to respond to things are complete idiots. So yesterday I had this guy and he was arguing about the stimulus, and I was saying, well, it seems to me that there are a lot of people that are opposed to the stimulus that have done really good studies and have numbers on how the knockoff effects of the stimulus will actually be bad for the economy in the long run. And this guy was like, no, that's not true. They're not numbers. Like, it worked in the Great Depression. And I'm like, no, that's not what that is. Okay, just saying that stimulus worked in the Great Depression or that stimulus works doesn't mean that these particular proposals are good for this particular situation. To determine that, you have to go and look at the models that you're using to determine these sorts of things and seeing what the aggregate effects are going to be. And there was this study that was saying, that the amount that it's going to take out of investment is going to be harmful in the long run, and that it will actually result in less jobs in over the 2-year period. And this person they argued with me back and forth on Reddit for like 12 posts, basically doing everything that he could to avoid actually saying anything about the numbers. It's like, okay, but that's not numbers. That's not numbers. So he finally, I think he broke down and he went and got a bunch of links. And I don't even think that he checked them. Like, they must have just Googled them, because one of them didn't work. And one of them was basically why we needed stimulus a year ago, right? But not for this particular stimulus. The other one was basically, here are the multipliers and here's how much you make from it, or how much it should affect the GDP. But the study that we were discussing was basically explicitly saying that, yes, if you look at the multipliers, that it's going to be good. But then when you look at the subsequent effects, which this other guy's study explicitly says we're not trying to look at, like, for instance, we don't know what it will affect the economy if interest rates rise, which they've already done today, right? And man, I was just like, so you argued with me for like 20 posts trying to justify why you didn't have to talk about the numbers or go into the economics of it. And then when you finally did give me a post, you basically gave me a post using the kind of analysis that the article in question had basically already called out and disproven. Thank you. And I was just like pulling my hair out, and this guy's like, "Oh, this is disingenuous." Like, oh, okay. So if I say that I don't necessarily think that this stimulus is going to be a good stimulus, that is because you can't argue with me. That's not engaging genuinely or whatever. This is just ridiculous. I think that the stimulus has worked great for me. I've taken a lot of money from new traders, and I've tried to get that money back in the economy. I see making a stock trade on the phone, but day trading, no way eventually. Yeah, I agree. Listen, man, like, speed is an essential factor of day trading. Like, honestly. Okay, something's going on. That really ignited it. It seems that it might be a positive. Come on, good. Okay. I consider myself more of an active investor with a passive style. I got 1400, so I have to be. Yeah, that you should be really careful about it. You should, I wouldn't necessarily day trade. I just like watching day traders since the conversation is more highbrow. Well, I don't know if it necessarily is always. I have to say, so every once in a while I will go. Last week I decided to go and look around at some other streams, and they were not highbrow, let's just say. So you'll get two kinds of things. One, you'll get the guy that is basically, his whole thing is pumping his picks. Like, he has the picks and he's sending them out to all of his users, and now he's turning around and he's trying to say, look, here's the one that got in and it's great and everybody needs to see and look at it. Right? There's the hype guys. Then the other set that you're going to get is technical analysis guys. So they're going to talk about all of this stuff about the charts and what settings they use and everything. And it's just like, okay, but what empirical evidence do you have that your strategy works? And they don't have it, This is the thing that's so frustrating. Like, you go onto all of the forums and you're like, okay, like, Trading is hard. I don't have it all figured out. You know, here's what I do. I don't have it all figured out. Maybe somebody else has it figured out. You go on the forums and you read, and like everybody kind of, well, most people, they're not necessarily saying it, but if you talk about it, everybody seems to believe or at least pretend that they think that they're a profitable trader. But then when you listen to what they say, it's like they don't know a darn thing what they're talking about. So I had another one the other day where somebody was talking about an optimization problem. They were saying, is there like a win risk reward ratio that is like overall most optimal for the markets? And I was like, that's like a nonsense question to begin with. That's like saying, if there's a cube, is there a length, an optimal length for this side that will optimize the volume of the cube? Well, you make it as big as you possibly can. Of course, the optimization only makes sense when you have other restrictions on it. Like, if you have a certain risk reward, then the win rate is going to be this. And how do you know what the win rate is going to be? And, well, that's going to depend on what the signal itself is. And so you're going to get a reward ratio that depends mostly on what your signal was. And you think that it's this because all of the strategies that you've ever investigated have been swing trades. Anyways, I just get so frustrated sometimes. And then, like I was saying, like I'm not completely on the ball today. I'm a little under the weather, or at least my body thinks that it's sick because the inflammation in my colon. So I'm like extra grumpy about it. but yeah, I don't want to say that I think I'm smarter than everybody else, because I don't think that that's necessarily the case. But the kind of conversation that I want to have about things doesn't seem to be the kind of conversation that most people want to have. The sort of things that I look to try and find edge in the market seems to be the things that most people don't want to look to find edge. They want to find it all in a chart. They think that it's all about looking at a chart, recognizing a certain pattern and trading that pattern, and it's not. BlackRock CIO Rick Reidler on Bitcoin. We've started to dabble in it. Oh boy, not BlackRock. Well, they're not moving that much so slow. Let's see here. So we still got 45 minutes left. Oh, by the way, I took that trade in the E-mini and I got the winner off of it. I only went for 8 ticks and that was pretty good. I think I had a good signal there, but you know, I didn't explicitly think like, because I was kind of thinking like, oh, maybe this will run to the top, but I'll just take the small one and kind of fill it out first. But now I'm looking at it and I'm like, no, that was the right thing, because we're still up here really constrained. How can you say that? There's lots of ways to beat the market. Well, so the reason I can say that is I do believe that there is always going to be some type of inefficiency in the market, and there could even be a pattern or calculatable inefficiency that you could potentially see and try and take advantage of. But the issue is that everybody else out there is trying to do that. And so those edges tend to get removed very quickly. Right? Yeah, say chart pattern recognition can work, but only after an extreme amount of hard work and suffering. 95% fail because they don't do the work. No, I think that 95% fail because there's only room enough for 1% of people to actually make money off of charts. And those people that are all making the money from it are robots. That's what I think. Well, there's always going to be a certain number of people that are successful with a certain methodology just because they're really lucky, right? Okay, so that one just completely took off really well now. So maybe it does go up to the high. I wish I was looking over there when that had happened. I don't really feel like taking another trade today, though. I feel tired. And they are absorbing there in that location because this is the top of the profile. So I'd have to see maybe, right, it's maybe somewhere up in here. I think, though, we'll get into this when I make my video. I don't know if it's, well, it should be the next video, but I still haven't found a good microphone for it. So it's going to be hard to do it. I'm probably, maybe I will just do it from multiple different angles and stuff. Do a voiceover and stuff. But I think that trying to just look at the technicals of price is myopic. I crap missed that. I wouldn't consider it that a chart pattern. So I was saying wasn't watching to see what happened there. But I wouldn't have taken it there because of the chart pattern. At least I don't think that's what I'm seeing. But I digress. There's only so much edge that you can pull out of a price chart. You get what I mean? Like, this is, I think this is here's the key thing that I think most retail traders believe that they are wrong about. They believe that the chart has infinite edge. It doesn't. It has a limited amount of edge that you can pull out of it, and there is a high degree of competition for that. That's what because every backtest that I've gone through and I've done based purely on technical patterns, I can get, with an equal risk reward, I can get at best 55% with just chart patterns. When I get order flow, it's a little better. I can get like 55. But with just price, I don't know if I've ever gotten one more than 51. That's the amount of edge that you can pull out of a chart pattern. And when every retail trader out there is trying to pull that out, what makes you think that you're going to make something from it? Whereas there's this whole other world outside of it. Volume analysis, news analysis, strategy analysis. How do hedge funds and CTAs react in these certain situations? Volatility analysis. There's this the market psychology. There's this huge world of trading, and everybody focuses on this one teeny tiny little part that is like the least influential. Don't get it. And it's only going to get more complex. You're right, Vlad. Because my view of it is that there is not some perfect setup. There is only being aligned with the market and understanding what it's doing and not being aligned with the market. And your job is to understand as much about the market as possible so that you can be in alignment with it. Hence this thing over here, this trade in the treasuries, man, if I hadn't have remembered that we had already had a really big down day, and maybe that big down day was in preparation for the PPI number, and if I didn't know the amount of absorption that you were getting on every one of those prices and had watched the way that that move had gone and everything, there is absolutely no way that I could have ever have dreamed that we would come all the way up to 29 in the 10-year treasury. But because I knew all of those things, when I started seeing it come back up to the open, I kind of sat back and I said, well, normally here I would short it, but I know it's a bad idea to do it because there's profit taking going on here, right? See? That is the sort of trade that the wider analysis allows you to make that the guys that only look at the chart don't know. I tend to think that most people are looking at charts are looking at them for quick gains from momentum, whereas I'm trying to look for the most relatively reasonable and timely low pricing. So yeah, yes and no. So indexes are different. So this is the thing that's really interesting about futures. So the biggest players in the futures space are CTAs. And CTAs are generally using swing trading momentum following strategies that they start to see a move like in the treasuries. They would see the treasuries falling out yesterday and go short and will try and stay short all year and see how much they can make from it. And that's how they manage. And then there's all this stuff about managing the position and, you know, rolling it over and all that, right? That's a CTA, right? So futures are really good for those momentum building strategies because once a commodity starts to go in a certain direction, it's usually because of really big, wide reasons that tend to last for long periods of time and stuff, right? But then there's the index funds, and index funds tend to be mean reverting because it's a bunch of stocks, then they all kind of have to move together. So if you get a little bit of a rise in the index, the probability is that it's going to come back down. Okay. So it's like futures trading is good for trend trading, except for this one class of instruments, which, oh, by the way, happens to be the class of instruments that like 95% of traders are trying to trade with futures. Right. And then on top of that, we have come into a period in the market where for the past year, well, actually, really, maybe even longer than that, that the index futures markets have actually trended pretty well themselves. So it's, you know, so it's like what it is with this is where I have issues with ACE's strategies is like it works really well in this market. And when you understand how he's, you know, using a moving average and he's letting it run and everything, you realize why that works, right? But if we were to go back to before the time period that he started trading, when the markets were more mean reverting, it gets slaughtered. Well, with all that said, there was a pretty good up move that we missed, and I didn't see what the impetus for it was. Here I was slow. Don't want to take it from here. We got 30 minutes left. Buy programs dominate today in high frequency trading. Oh, my robots did really bad today. It was less than what they made yesterday, but it was still pretty bad. Except for Jay. Jay, I think he lost like 2 or 3 days worth of profits. Which, again, that's the way that he's designed. But here, I really feel that we need to filter him better. And when I come back and I look at this, now, part of it was that I had this open, so I kind of wonder about that because some of them were just so bad. But see, like this, for instance, right here, I don't think we should take that one. There's not a really clear imbalance, right, in the book. So here, this one on the long, that one I suppose would be okay. I think that one is because there was a lot of pressure on the market for whatever reason there. This one, this short, that one doesn't necessarily make sense because there was pressure on the other side. And these were on the other, so that's, yeah, that one they shouldn't have taken. This one, wait, it went long there? So that one doesn't make sense at all, why it would be long, but I can't see the order flow there in that location, so it's fine. These ones back here were okay. Like that one is perfect, right? There was, I would like to see a little bit more imbalance there, but. So the question is if I add this filter and watch that imbalance, how many does it filter out and how much does it increase the win rate? See, there's another one. I'm really... I should add this strategy on here instead of doing it this way. Well, it's the top of the hour, and we're going to go for 30 more minutes, but I'm going to take a break real quick, all right? I'm back. I see Seth died. Oh. No, I just want to take a break. Market's still being difficult, isn't it? I caught one good trade. And that one good trade, it was definitely some unusual order flow, but there wasn't anything really to it, so I don't know what was going on there. Stardew Valley is simpler, you just farm. That's what we should do, man. You just do Stardew. You went short there? No, 11? Yeah, that does sound bored. There was momentum on it. I get it. No, they're going to cross the ATR stop again. It's kind of funny because I look at the ATR stop, and that's something that I explicitly think doesn't work. Like, it seems to me like the ATR stop is a good target because they like actively go for it. Oh my gosh, the new squat guy, he was just quoting the Fed speaker that's going on right now, and he was saying risks, but he couldn't say it. It was like risk. That was funny. Well, I'm thinking about giving him a hard time in Financial Juice, but it'll be nice. Financial Juice has a Discord. So Fed speak. Oh wow. Okay, so now they're taking. Man, you just. Did you have an actual? So did you have an actual edge there that you just weren't? You were being coy about it, or were you really just bored? Let's look. It's gonna revert back up. That's funny. Hope you locked some of that in. Besides your signal, no, but we were past your signal, yeah. So I was saying, I was like, well, if you had taken 14. And now I'm sitting here, I'm like, oh, I want another one. But when I actually look at what's going on here and how it's reacting to that dip to the open and it's buying again, I'm like, no, I actually don't. Actually, I don't. If I was going to do the mean reverting trade, I could take it here from around 10. Well, like from the open, maybe to 18 max. Oh, but you weren't here for taking. Oh, I got you. I got you. So it really was your signal, but FOMO. Missing your signal and FOMOing. Katie Cares Painting. Yeah, I'll own that. Okay, good. We just... I want to know how Kevin O'Leary is doing with trading on Robinhood and following the crowd. Anything else interesting going on Twitter here? No. Uh-oh, the child sounds like he's breaking something outside.
Oh, to pull the register out?
Yeah, and then he'll stand in it and cut himself. So. My mom, she would rather clean than just sit down and play with him. You locked 2 ticks in, okay. It kind of looks. You notice that when it turns, that it goes like it really speeds up, doesn't it? You say that Russell is the weakest? Sure doesn't look so if we recall, well, it happened earlier than this yesterday, but yesterday was a little bit like this. Like there was up movement, but like it kept fizzling out, right? And you notice when the up moves have come, there's been like a almost like frantic activity, and it goes up, and then like the trend dies almost immediately. And look at the treasury. Treasury is sitting up at its highs. So it's gone back and forth across this range a few times, and now it's up at its highs, and actually a pretty good stack at 28.5 uptick. Are they gonna bust through 29.5? That might be good for a level break setup right there. Like maybe only for 1 or 2 ticks. It's the robots. They want to scalp every move. I don't know about that. Nope, that one was no good. Well, there you go. There we go. You win. Wow, I can't believe that didn't fill. Okay. I really thought your sheep story was gonna hold up, Ace. Oh my gosh, you guys. Now you get to spin the wheel and win. Sorry, I forgot the wheel today, guys. How long has it been? Oh, it seems like forever, but it's only been a minute. Okay, we're fine. We're fine. Well, I tell you what, if they're gonna go for like a full-on down move now, of course, we're still a way to the low of the day, but they sure are starting to pick up some momentum, aren't they? There are some pretty enticing targets quite a ways below us. Hip squeaking to profitability, is that probably not? 38.80 and my stop out is 38.90. Oh, ow. That looks awfully well. And what about the fine profile? Why 90? Oh, I see. So 38.90 is kind of an enticing target down below us, but we are going to have 3900 first, right? And I shouldn't like just rest on my laurels, because this is like one of those ones where it doesn't quite get it, you know? Oh, U.S. has had a case of the Bristol variant of coronavirus. That's not good. Twilight Zone is ETF provider warns buying silver will harm hedge funds and large banks. Really? Well, then we should buy it. Oh, come on, guys. Wait, who said this? I hate slow drifts. Yeah, it really hasn't been moving with oomph on the way down, has it? That's why, something like that. Yeah. Come on. All right, there we go. When I started to get it to run, I really thought, oh, this could just careen down there. And it still might, but it's not exactly the situation that I was looking for. So I think that I can just take my profit there. And because at the moment, it looks like they touched 3,900 and there's temporary demand at that location. As it turns out, as was to be expected, SLV was not the silver ETF to move to panic stations the week before last, for at the exact same time on the 2nd of February, Aberdeen Standard Physical Silver Shares, also using JP Morgan London as a metal custodian and also traded on ICARCA, quietly amended its prospectus to both sinister and comical effect, and in stealthy fashion uploaded a new version of its prospectus to the SEC website, inserting the following wording on page 6. As of the date of this prospectus, an online campaign intended to harm hedge funds and large banks is encouraging retail investors to purchase silvers and shares of silver ETPs to intentionally increase prices. This activity may result in temporarily high prices of silver. Why else would Aberdeen Standard be afraid of a market force that intentionally increases prices, unless, of course, that's not what the ETF operator actually wants to happen? But it gets even better. On page 7, the amended SIVR prospectus, Aberdeen Standard again confirms whose side it is really on and specifically why it is so scared of this online campaign to free the silver market from the clutches of the hedge funds and banks. A possible short squeeze due to a sudden increase in the demand of silver and the demand of shares that largely exceed supply may lead to price volatility in the shares. As of the day of this prospectus, the fund and other silver ETPs are experiencing an increase. I don't get it. Difference between the trading price and NAV per share may widen. So this is interesting to me, though. I'm not quite following what they're hitting on here in Zero Hedge, but one of the things that I see is that if real demand came into silver and gold, like it did that one day after the GameStop thing, the ETFs wouldn't be able to buy the silver fast enough, and the ETFs wouldn't actually be able to handle the demand. So it really would cause like true chaos if silver like really took off. Okay, see, look there at that. So I could have gotten 5 more out of it, and it did kind of look like maybe they were going to go down, but now it's reverting again. So it's like, yeah, they didn't quite go to the stop. The stop is still at like 38.95. The demand for silver may temporarily exceed available supply that is acceptable for delivery. Can you imagine that? That all it takes is just, a few people, retail people, thinking that silver is a good buy, and they won't be able to find enough silver to get delivered. Like, that's how constrained the supply is. I suppose the gold and silver markets are not as big as we are often led to believe, but I guess we've always known that because you go and you look at the market depth, and it's not nearly all that liquid for as big of a deal as some people make it gold and silver out to be, right? So after all, maybe this SIVR panic of the 2nd of February is not so different to that of the iShares Silver Trust of 03 February, which, as a reminder, and to come back for full circle, warned in its prospectus that the demand for silver. Yeah. They're trying to call it out. I don't think the Wall Street bets will care. Let's see if we can just, so if we give them that link, what do you think happens? Post. Maybe the ETF provider is saying that because they want to attract people to come in silver. I don't know. I'm just going to post it and see how they react. I bet you that they're going to come in and say, you know, that this is just shilling to distract from GameStop. Let's see. Because when that, well, let's go and read here. We come in here to Wall Street Bets. Bum 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 bum. Oh, what's this? The 1.75 million gain to a negative 250K. Senator, I just like the stock. See, they're still talking about it. Is squeeze shall squoze later than you hope, sooner than you fear, and right when you least expect it. Okay, buddy. Okay, buddy, you're still in, huh? Oh, Goldman Sachs upgraded Palantir. Is that why they're? By the way, where are they today now? They've been the thing. Oh, okay, they're up 1%. They're up 1%. VIX is still up, by the way. 8% now on the VIX. Yeah, let's get rid of GameStop. VIX. VIX, that's what we care about. Okay. Oh, yes, I see. But at the moment, it looks like the equity indexes are going to recover, so. Yeah, silver metals still aren't doing super hot today. It's just that dollar flight, dollar back up to 91 is really hurting them. No, but our rare earth resources is doing really great today. Almost at $3. Can you believe that I bought it at like 60 or something? And you got and the people in chat tried to talk me out of it too. Oh man. Should have put more on it. Oh well. Oh, okay. So it does look like they're still talking about GameStop a little bit, but they've moved on to other stuff. Michael Burry sold all of his GameStop before the before the DFE insanity happened? Really? So where did he get out at? So they sold it at $17? So he didn't make any money from it. That's interesting. Can you believe that? They went long on a micro gold. Oh, good luck with that. It doesn't look so great today. It really, really doesn't look very good today. The metals. Buys a dip, keeps dipping. This is the way. GameStop again. Yeah. Oh my gosh. Oh boy, buddy, you lost 50% on that. Why? Why are you still buying? I don't understand. Why do you think it's gonna happen? It's over. OVAH. Over. We all know the squeeze has not been squeezed. This is just so sad, man. Like, I thought it was a great trade, but it's over, and there's so many people that still think, like, what? It's like 3 weeks later now. Bloomberg says Wall Street bets expose the silver market and the shortages are real. The silver conversation was mostly happening on Twitter. Most of Wall Street bets thought it was a conspiracy. Yes. Yeah. Oh, so some people are talking about silver. And, well, I'm going to vote this. Do my part to support the positions. I do have a position in silver. And do have a position in silver. Do we trust Bloomberg now, or does it depend on if it confirms my bias or not? Okay. Bravo, mister. You got it. Okay. Oh, you see, it's fun. It's fun to read Reddit, guys. Especially when you're arguing with people, but reading is fine too. We're in a tight range today. Yeah. Well, I still think that the bottom could fall out, but the treasuries still look a little scared. I think some of this action, I would venture to guess that the shorts are exited their position, and that what we're getting now is just kind of the liquidity sloshing around after that, in the treasury. David Kiyosaki. Oh, the rich dad. I can't. I don't think that guy is really know what he's talking about. But he talked about companies wanting the price of silver to stay low as it is used in batteries and solar panels. And there is only a finite amount of it left. There is a finite amount of silver left. No, it seems like it is picking up. That's interesting. Well, so let's come back here to Wall Street Bets and search for silver. Yes, they are not making any more silver. No, I mean, they can mine more, but maybe there are like only limited known deposits or something. I don't know. Silver bugs. That's a subreddit just for silver, huh? So if I want to confirm my oh wait, what? Retry. Come on, Reddit. Okay. From the past 24 hours. There you go. That's somebody talking about PPI. Huge predictor that CPI inflation is on the rise sooner than expected. Signals potential Fed changes also sooner than expected. Discussion. Bum, 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 ba-dum. So is this or good or bad? I'm retiring these guys. Money cheap, thing cost more. Money make monkey get less banana. Okay. Yeah. That just turned down fast. What? And they're not going to go over the low? Come on. Ooh, okay. But the treasury coming down a little bit as that's happening. Doesn't look like this one's going to go, folks. Oh yeah, they hit it back hard. Well, no, you know what? It's time for me to go. Well, I made a little bit on it still. I gave up some on those two trades, but I still overall made money on the indexes. Let's see here. Actually, those two. Okay, yeah. Mostly though, it was just that really great E-mini trade. Okay, well, it's time for me to go, so. Breakout, PPI, report, sparks, inflation fears. All right, guys, I'll see you later. Thanks, Vlad. Stay profitable, friends.